Tumbling share prices among big tech companies rattle investors. Prime Minister Anthony Albanese set to reshuffle his cabinet. And Qantas and Virgin cut international airfares. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 26th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. First week back, how'd you go?
It's been good, actually. You know, when we have big stories like Joe Biden and the main story today with the tech stocks, a week like this absolutely flies by.
I'm with you. It's been a great week, actually. Fun.
Yeah, I'm looking forward to the weekend edition tomorrow as well, but we'll get to that later on, Sean. The main story this morning, plenty of nervous investors in technology stocks today with big falls in major names like Tesla and Nvidia and Alphabet raising questions. It's a big question about whether tech has peaked.
Earning reports from Alphabet, parent of Google, and Tesla triggered a slump in big tech stocks, with the Nasdaq on Wall Street down 3.6%, the biggest one-session drop since 2022. The big seven tech stocks lost around $1 trillion in value for the session. Incredible. The problem for the tech companies is they are what investors call priced for perfection, meaning they're so highly valued that any little disappointment can send share prices tumbling. Tesla's June quarter earnings were down 45%. They were disappointing. Its share price closed down 12% yesterday morning. It's still up over 18% or so during the last month, so it's hardly a crisis. But the sentiment in the last 2 or 3 days hasn't been so good. At Alphabet, earnings and revenue expectations were better than expected, but its share price fell more than 5%. Alphabet investors are worried about its profit margins, and the share price of market darling Nvidia fell nearly 7% as people become just a little more skeptical around the promised riches of artificial intelligence. Those moves were reflected in the local market yesterday, with tech stocks sold off hard. It really does demonstrate the fickleness of traders at the moment, particularly around tech stocks.
Sean, can we say it? Can we actually say then that tech has peaked?
You can, but you'd be a very, very brave person to confidently predict that, Michael.
I don't think I'm brave enough for anything like that.
I mean, it's been predicted for a couple of years now that tech stocks have peaked, and it hasn't happened. And as a result, the 6 largest companies on Wall Street are all tech giants: Microsoft, Apple, Nvidia, Amazon, Meta, and Alphabet. Tesla, I think, comes in at number 8 or 9 or so. I think Berkshire Hathaway is bigger than it. Still, the top 6 stocks are the tech stocks. What's different now, I suppose, compared to the last couple of years and even the last couple of months, is that more large economies are talking about cutting interest rates. They either have done it or they're about to do it. That should help many interest rate sensitive stocks, which are often smaller companies. So in the US, for example, small cap indices have been rising while the tech stocks have been falling. So lower rates theoretically should help what they call value companies, lower priced companies, which do better when interest rates fall. Also, the just unbridled enthusiasm for anything AI seems to have been tempered just a bit. That's worked against companies like Nvidia and Microsoft. So I think what I'd say, probably can't say it's peaked, but certainly there's a bit of a reality check going on Wall Street at the moment, and I dare say it's well needed.
All right, let's turn our attention back home now. Sean, local markets, how did they perform yesterday?
Wasn't a very good day. The S&P ASX 200 closed down 1.3% to 7,861 points, with the sell-off in tech stocks overseas hitting the local market. A lot of commodity-based companies also didn't do very well. In fact, 3/4 of the top 200 ended the day lower. The tech index was down almost 3%. WiseTech Global was down about that amount. Worst of the large caps was Fortescue Metals Group, which closed 5% lower. Other poor performers included Wesfarmers, Goodman Group, Santos, James Hardie, and Transurban. In fact, all top 30 stocks closed lower. You don't see that very often. In corporate news, jobs marketplace Seek has written down the value of its Chinese marketplace, Alpine, by $141 million in an outcome it blamed on China's weak economy. Its share price fell 1.6%, and Ampol was down about 3% after it gave a trading update. It said first half trading was resilient, investors didn't like it that much and sold it off.
And just back to international markets, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. We've talked about Wall Street, Sean. What else is happening on international markets?
Well, oil prices rose for the first time in 4 sessions after figures show that US crude inventories fell and Russia said it would make extra production cuts. I didn't actually realise this, and I feel a bit dumb because I didn't realise it. Russia's actually the biggest oil producer among the OPEC plus countries. I always assumed it was Saudi Arabia.
I don't think you need to feel dumb. I would have made the same assumption. I'm a big one for making assumptions, Sean.
And Russia's actually the second largest oil producer in the world. The largest isn't an OPEC member, and it's the US. But of course, they don't export anywhere near as much because they, use it to fill their cars. The fact that there are production cuts coming from Russia, alongside the fact that the Aussie dollar is slipping, it's now about 65.5 US cents. Well, it made me think it's probably a good time to check in on petrol prices. It's a Friday. That's what we should do. I know that petrol prices around my place are high, not extreme, but certainly at the higher end of things. Now, in Sydney, prices have peaked and they're on the way down, according to the Australian Competition and Consumer Commission. This is all indicative, no guarantees in this, but certainly not a bad place to start. In Melbourne, they're on the way up, so maybe you should fill up now rather than wait for a few days. Same deal in Brisbane. Adelaide prices are falling in close to lows, while in Perth, they're at a peak. So if you've got half a tank, try and hang on.
Just cruise down hills in neutral for a little bit.
That's right. Yeah. There are a couple of interest rate moves by global central banks yesterday. We're excited about those sorts of things because, of course, we have inflation data out next week, and the following week, the Reserve Bank prognosticating on what it's going to do around rates. We had the People's Bank of China come out yesterday and unexpectedly lower the cost of its one-year policy loans by the most in more than 4 years. That should support the world's second largest economy. And the Bank of Canada cut interest rates by 0.25 percentage point for a second consecutive meeting. It signalled further easing ahead as inflation worries wane.
Bonus points for the use of the term prognosticating today.
Yeah,
Sean,
I'm proud of that one.
That's most impressive. Speaking of impressive, you have a very impressive guest today coming up after the show. You're speaking with Professor Jamie Pittock from the ANU and the Wentworth Group of Concerned Scientists.
Now, I think Jamie, because we did this interview yesterday, I think he uses the term ad hocery, which I think has to go in the prognostication style bucket of great words to use.
Ad hocery. That's fantastic.
It is. It is. Irrelevant to what we talked about, though. Jamie's a great guy. He, as you mentioned, is from the ANU, part of the Wentworth Group of Concerned Scientists, and it's all about the money needed to spend to revitalise the environment. So we're talking about, the banks of inland rivers. We're talking about waterways, fish reserves, those types of things. It's not actually that much money to improve the outlook for Australia's food production, which is probably the most critical thing, clean drinking water, all sorts of stuff like that. The Wentworth Group of Scientists have done a 6-year study to look at what is needed. It's split it into 5 different categories, and it explains, how much money is needed in each. It was released at the National Press Club this week, and we talked to Jamie all about that. It's a little sort of different to what we normally do here at Fear and Greed, but it's a great chat, really interesting.
Yeah, it certainly is. It is a fascinating one, well worth a listen today. It's coming up after the show, so stick around for that. Sean, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese will announce a cabinet reshuffle over the weekend after 2 ministers resigned, and he sounded just a tad like he was electioneering.
Yeah, so Linda Burney and Brendan O'Connell will resign from Parliament at the next election, but they'll step down from Cabinet immediately, paving the way for a reshuffle of the front bench. Both members are from the left. Now, the 67-year-old Ms Burney was the first Indigenous woman to sit in the House of Representatives and the first to be a member of Cabinet. Mr Albanese used the announcement yesterday to highlight the government's stability, saying no government in living memory has had the same Cabinet and ministerial positions for its first 2 years in office. He went on to say that at the next election, due by May next year, he'll be seeking to be the first Prime Minister since John Howard in 2004 to serve out a term and be re-elected. which is actually quite incredible because you think of the destabilisation in both the coalition and Labor over the past 20 years. The fact that he could come and be the first Prime Minister seeking to be re-elected and serve out a full term is quite phenomenal. I just think he sounded like he's electioneering day.
You might be getting a bit of a head start on here, Sean. Now, Macquarie Group yesterday said fewer big transactions are holding down earnings, sending its share price down 3.6%.
Business at its investment banking and financing arm, traditionally one of the strong suites of the group, has been slow with fewer corporate deals and slower sales of assets. Macquarie boss Shamara Wickramanayaka said she remains cautious about the short-term outlook, and the turnaround reported by US investment banks wasn't happening in Australia yet. Macquarie said earnings in the June quarter were flat. Now, the group held its AGM yesterday. Its year-end is March, so yesterday's data was just on 3 months. Helping during the last 3 months was increased activity in commodities trading, particularly in North America around gas, power and emissions.
I mentioned this one at the top of the show. Qantas has now cut prices 6 times this year, and Virgin Australia is averaging at least one fare sale a month, according to Flight Centre.
International fares globally fell 6% in the first 6 months of 2024 from a year earlier, Flight Centre said in a report released this week. Flights out of Australia were 13% cheaper, while fares to Indonesia, including Bali, were 18% lower. Flight Centre said prices will continue to fall as the cost of living crisis makes consumers more price sensitive. Now, the CEO, James Kavanagh, said under pressure airlines are seeking to fill planes months before departure, so there are deals for early bookers, citing 10-day tours to China, including flights and accommodation, which are actually on offer now for less than $1,000. Pretty incredible. The lower airfares is a partial rebalancing of power from the post-COVID demand surge that gave airlines almost a free rein to lift fares. Now, falling fares reflect the growing number of international flights on offer, particularly in Asia and Europe, and a travelling public that is increasingly cost-conscious. Have you taken advantage of any of these fares, Michael?
No, Sean, I have not. I had a holiday at home last week. And the cost of living crisis has hit the Thompson household for sure. But I hope one day in the future to be travelling overseas again. Sean, by any chance are you planning a trip overseas sometime soon?
I am, as it turns out. But my point in this wasn't so much to boast and to rub it in, though I don't mind doing that.
It's a happy accident, that one. Go on.
You know, when you have younger kids, so your kids are younger, primary school or infants in primary school, it's you see people who are older like me, and you know, not that you are. You don't ever want to be as old as me, but you think to yourself, oh, I wish I could go on holidays like they can. And there's a real kind of joy in your kids getting older and going away without
and leaving them at home.
Sorry, guys. Hope you're not listening.
Yeah, I note your trip to Thailand is for 2 people only.
Yeah, went to Bali for 2 people. China for under $1,000.
Yeah, it's only one way to get the cost down of these trips is just to leave everyone else behind.
Mine are adults. My children are well, they're almost. I mean, 15's an adult, isn't it, nowadays? Yeah. They grow up so quickly.
Close enough, Sean.
Sorry,
anyway,
Rosie.
we're going to get ourselves in trouble here. Let's move on, shall we? Rising costs of mining iron ore in Western Australia is hurting Fortescue Metals Group, with the miner warning that costs could be up by 9% in the next year.
That was enough to trigger a 5% fall in Fortescue's share price, taking the total decline this year to 30%. The group said export volumes would be higher than last year, but unit costs will be somewhere between 1% and 9% higher. Now, the thing is, when you have more volume, unit costs should be falling. That's not happening. Fortescue Metals has experienced continued pressure on costs, and digging up a tonne of iron ore is now almost 50% more expensive than it was before the COVID-19 pandemic. The strip ratio, do you know what the strip ratio is, Michael?
Did you say strip ratio?
Yeah, stop grinning. I better move on. I don't want you to even ask.
Sounds very erotic.
No. It's pretty lonely out there on those mines. The strip ratio, which is the amount of waste rock dug up to access saleable iron ore. Sure, you knew that. That's expected to rise as well. So if you have a higher strip ratio, it's going to cost you more. Analysts expect Fortescue to come in with an underlying profit of about $9.3 billion next month when it reports.
And if an analyst isn't quite revealing how much they expect it to be, it's a strip tease.
Good. Well done.
I didn't like it. Felt like it was lazy. Anyway, Sean, part of the cost problem in mining, particularly in WA, is the cost of labour. But yesterday, the boss of Australia's largest listed gold miner said the heat is coming out of labour costs.
Northern Star Managing Director Stuart Tonkin reckons production costs could plateau or maybe fall on the back of the demise of the nickel industry in the state, the slump in lithium prices, and the shutdown of some high-cost iron ore mines. There have already been 7,000 job losses across the nickel sector in Western Australia.
The chief executive of ANZ, Shane Elliott, and other senior managers are under a bit of pressure over the misleading trading data submitted to the Commonwealth Government last year.
Yeah, we talked about this yesterday. It's really heating up. Mr. Elliott yesterday said he had delivered a personal apology for misleading the Australian Office of Financial Management about its bond trading activity, with the bank now investigating whether it should have reported the issue to the regulator well before it eventually did. Even more interesting, the bank's board, chaired by Paul O'Sullivan, is leading a process to ensure consequences will be applied to senior executives, and I quote what Mr. Elliott said, both past and present, including myself, where appropriate. Don't think I've ever seen a CEO saying that the board is investigating himself. Several employees in the company's Sydney dealing room have been dismissed or suspended for misconduct. Earlier in the month, the bank admitted to the Australian Office of Financial Management that its market division overstated the value of government bonds it traded by more than $50 billion in 12 months alone. It kind of, as we put it yesterday, inflated its resume. That boosted its prospects of winning some of these lucrative mandates from government.
One more before we get to international news, Sean. Origin Energy will spend another $450 million to expand its battery storage capacity at its Eraring generation site in New South Wales.
Yeah, it's looking at a second battery at the facility. It'll add longer duration storage, which is increasingly needed as the transition to renewables continues. It involves a storage system with more than 4 hours of capacity. Maximum output of 240 megawatts is due online in March 2027. The first battery, which costs $600 million, involves 2 hours of storage. This one we're talking about 4 hours of storage. The size of this second system will make it much more suitable for absorbing excess solar generation during the day and applying it through evening peak demand periods, which is kind of one of the big challenges for batteries, is being able to grab it, store it for long enough, and then get it out to consumers.
Turning to international news now, and US President Joe Biden framed his decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders.
In his first speech since ending his re-election campaign and political career, Mr. Biden gave an 11-minute Oval Office address saying, I quote, "I have decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation." He said it was a difficult choice, but ultimately he needed to put aside his personal ambition. I'm quoting him again, "The great thing about America is here, kings and dictators do not rule. The people do. History is in your hands. The power is in your hands." End quote. Not hard to see what he's talking about. If you read between the lines, he's talking about a new generation. Remember Donald Trump now, the old man in this election campaign, and kings and dictators. We know who he's referring to there.
Now, the number of Japanese citizens fell at the fastest rate last year since data collection began in the 1960s, adding pressure on the nation's social security system and the shrinking labour market.
Yeah, it's kind of a really interesting demographic story, this one. The population of Japanese nationals fell by more than 861,000 to 121.6 million over last year. That is the 15th consecutive year where the population of Japanese nationals have declined, according to the Ministry of Internal Affairs. While the foreign population increased last year by 11% to hit 3 million, it wasn't enough to make up for the shortfall in Japanese nationals. The overall population shrank by 0.4%, according to a report on Bloomberg. This creates all these incredible challenges, not least finding people to do work in Japan. At the moment, there are nearly 3 openings for every worker looking for a job. The unemployment rate is less than 3%.
Oh, that's extraordinary. Okay, up next is the Fear and Greed Daily interview. Your guest today, Professor Jamie Pittock from the ANU and the Wentworth Group of Concerned Scientists.
All about a report that the Wentworth Group of Concerned Scientists released at the Press Club this week about how to save Australia's environment. We're not talking carbon here. We are talking about riverbanks and estuaries and food waterways and soil and that type of stuff. It's a fascinating chat.
Yeah, and even the fact that they say that we'll be able to essentially preserve all of the threatened species as well. By investing this money. It's just a really, really interesting chat, and a huge amount of work has gone into preparing this report. So a very big week for them. It is definitely worth a listen. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And if you're after something a little less worthy...
Oh, I don't know. I wouldn't say that.
Stick around tomorrow for the weekend edition of Fear and Greed, where you and I go head-to-head to decide the biggest story of the week and the most remarkable story and a few other categories. And our colleague Adam Lang judges us. And his judging is extraordinarily erratic.
Oh, it's totally arbitrary. Do you know what I'm most proud about the weekend edition of Fear and Greed is that we get a lot of feedback, probably more feedback on that than anything else. And people say we make them laugh. And I reckon if you can make people laugh in a business and politics show, you're doing a pretty good job.
Yeah, I'd like to think so. Usually they're laughing at us, I suspect,
totally
rather
at
than
us.
with us.
Yeah,
indeed.
Yeah, that's true.
All right, and stick around though. That one is coming up tomorrow, so make sure you've hit follow on the podcast so that it lands in your playlist tomorrow morning. Thank you, Sean.
Thank you very much, Michael.
It is Friday, the 26th of July, 2024. Follow the podcast. Join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.